Hey, so you're thinking about getting a small business loan. It can feel like a huge step, but with a little preparation, you can definitely improve your chances of getting approved and helping your business grow. Let's break down what these loans are all about. They're designed to give you financial support for all sorts of things, whether it's buying inventory, covering day-to-day costs, or expanding your operations. A lot of business owners find that after they get a loan, their revenue either goes up or stays steady, which is a huge win. And when your business grows, your customers usually notice and are happier with your service. The Small Business Administration, or SBA, is also a big help here. They work with lenders to reduce their risk, which makes it easier for people like us to get the funding we need. Now, there isn't just one type of loan. You've got options, and each one is for a different kind of need. Term loans give you a big chunk of cash up front that you pay back over time. They're great for big investments. The SBA has its own programs, like the 7A and 504 loans, which can be used for anything from working capital to buying real estate. They often have lower down payments, which is a big plus. If you need more flexibility, a business line of credit might be perfect. It's like a credit card for your business. You can draw funds whenever you need them, and you don't need to put up any collateral. If you're buying specific machinery, an equipment loan is designed just for that. And for smaller needs, there are microloans, which usually cap out at around $50,000. The good news is that even if your credit isn't perfect, there are still options out there, especially with microloans and some online lenders. You'll also hear about secured and unsecured loans. It sounds complicated, but it's pretty simple. A secured loan requires collateral, like property or equipment. This lowers the lender's risk, but it means your assets are on the line if you can't pay it back. An unsecured loan doesn't need collateral, but because it's riskier for the lender, the interest rates are usually higher. They'll also likely ask for a personal guarantee, meaning you're personally on the hook to repay the loan if the business can't. Loan amounts can range from $5,000 to over $100,000, all depending on what you need it for. It's really important to understand these details so you can plan your strategy and ask for the right amount. Alright, so the biggest thing is preparation. You've got to have your ducks in a row before you apply. Start by figuring out exactly what you need the money for. First up, your business plan. This is basically your roadmap, and it's super important. It should clearly explain your goals, how you operate, and exactly what you need the money for. Be careful not to ask for more than you really need, because taking on too much debt can really strain your finances down the road. A solid plan shows lenders that you've thought everything through. Next, you'll need to get your financial paperwork together. Lenders will want to see things like balance sheets and profit and loss statements to get a picture of your business's health. You'll also need your personal and business tax returns for the last 3 years. This helps them see that you can actually pay the loan back. And of course, there's your credit score. This plays a huge role. Most lenders like to see a personal credit score above 700. Some online lenders might go a bit lower, maybe below 650, but you'll probably face higher interest rates. If you can, try to improve your score before you even apply. Lenders also look at a few other things to see if you're eligible. For some loans, they want to see that your business has been up and running for at least 2 years and is making a certain amount of money, often around $150,000 a year. This just shows them that you're stable. And it goes without saying, your business needs to be legally registered and operating by the book. Now, where do you actually get the loan? You've got a couple of main choices: traditional banks or online lenders. Banks usually have lower interest rates, but they can be tougher to get approved by, and the process can be slow. Online lenders are often faster and a bit more flexible, which can be great for startups or businesses with less than perfect credit. You can also look for lenders that are SBA approved. Working with them can sometimes increase your chances and get you better terms. When you're comparing lenders, don't just look at the interest rate. You've got to look at the total cost. Pay attention to fees like origination fees, closing costs, and any penalties for paying the loan off early. These can add up and really increase what you end up paying. Okay, so you're ready to apply. The process itself is pretty straightforward. You'll gather all those documents we talked about: your credit report, financial statements, bank statements, and tax returns. Then, you'll fill out the application form. Just be sure to double-check that all your information is accurate before you submit it. After that, it's a waiting game. It could take a few days or a few weeks to hear back. Getting the loan is one thing, but paying it back responsibly is just as important. The easiest way to stay on top of it is to set up automatic payments. That way, you never miss a payment, which is great for your credit history. You should also keep a close eye on your cash flow. Using accounting software can help you track your income and expenses so you always know you have enough to cover your loan payment. And don't be afraid to talk to your lender. If you're ever struggling, just reach out. They might be able to offer you some flexible options. And hey, let me give you a few tips on what to avoid, because there are some traps out there. Be careful of predatory lenders. If someone is offering you a loan with super high interest rates or isn't clear about the terms, that's a red flag. Always compare offers. Also, don't borrow more than you need. It can be tempting, but it can lead to a lot of financial stress. And finally, always keep your personal and business finances separate. It makes everything so much easier, from accounting to taxes, and it protects you legally. So I know that sounds like a lot, but it really boils down to a few key things. Know your options, prepare a strong application with a solid business plan, and find the right lender for you. Once you have the loan, manage your repayments carefully, and keep an open line of communication with your lender. If you approach it with a little bit of planning, you'll be in a great position to get the funding you need to help your business thrive. Thanks for watching. If you'd like more information about business loans and the accounting to support your needs, contact us.